Non-submission of a tax return, as well as non-payment of tax due per that return, are criminal offenses per the Tax Administration Act. So that is what we've most commonly seen.
Good day, everyone. Thank you so much for joining us. My name is Junaid Bhayla. I'm a tax attorney here at Tax Consulting South Africa. And today we're going to be discussing tax debts, particularly in light of the approaching tax filing season. I'm joined today by Jashwin Baijoo. He is the Associate Director here at Tax Consulting South Africa. Hi, Jashwin. Thank you very much for joining us.
Thank you, Junaid. Thanks for having me on. I think a very, very important session today, especially with tax filing season coming up. And based on the current economic climate, a lot of taxpayers being unable to settle their tax liabilities.
Definitely. And I think that might be a good point for us to actually jump into. What exactly is a tax debt?
So, a tax debt firstly exists by operation of the law, and it is when a taxpayer owes any type of tax, really, whether it's personal income tax, corporate income tax, VAT, payroll taxes, etc., to SARS. So, initially, it starts as a liability, and per the assessments, there are then due dates for payment provided. Once that due date has passed, it becomes deemed a debt. And at that stage, it is then transferred as well to the taxpayer's tax compliance profile on e-filing, which they can very quickly check themselves to see whether it is green or whether it is red. And flowing from that, well, when you pass that due date, that's when SARS start with collection measures, commencing with a letter of final demand.
And I'd imagine, especially in light of this filing season, those who do have debts would be, due to expect a final demand, should they not satisfy that liability. But what exactly can a person do when they receive this final demand?
That's correct. And I mean, the first thing to probably bear in mind is just pre-filing season. SARS did significantly bolster their manpower when it comes to collection strategy. And I'm talking another 1,700 SARS employees. Beyond that, while there's a lot of system automations taking place with the AI integration and machine learning projects SARS are busy with, meaning final demands are sent out almost indiscriminately, but also from the system. Very little manual intervention is needed at that very early stage. Now, the letter of final demand itself actually sets out, well, one, how to respond in the time period you have. So, a letter of final demand will give a taxpayer 10 business days to submit the appropriate response or make full payment. Now, where full payment is not possible, your appropriate response depends on whether you intend to dispute the liability or you simply cannot afford it. If you intend to dispute it, you can then file a suspension of payment, which must either be coupled or very closely followed by a notice of objection. On the other hand, where there is no merit for dispute, you may then file a deferral of payment, which is simply paying the whole tax debt, inclusive of any interest and penalties that may have accrued, but over a number of months. Then, on the other hand, while if you straight out can't afford it, you file for a compromise, which is very literally a partial write off of tax debt, often including the interest and penalties in its entirety.
And I'd imagine that's quite the saving grace for taxpayers who actually can't afford to settle that liability. But is this limited then to individuals in their personal capacity, or does it also extend to companies, trusts, so on and so forth?
So there is no limit. And when I say that, I mean, while one, it can be any amount. Two, the amount does not have to be from this filing season. It can be from last filing season or 5 filing seasons ago. Because when you are looking at debt relief mechanisms, they are not subject to the same time limitations as disputes are, meaning that you do not have to file necessarily a compromise within 80 business days from the date of issuance of the assessment.
Hmm.
And it also can also cover a much longer period, whereas on the dispute side, your absolute cap in exceptional circumstances is 3 years from the date of assessment. Now, in terms of the debt relief itself, while it can apply to individual natural persons, companies, closed corporations, sole props, trusts, literally any form of taxpayer, even deceased estates.
It's very interesting. And with regards to companies specifically, or these juristic entities, um, should directors, trustees, members, are they exempt from being held liable for the company's debts, or is there any cause for concern there as well?
Now, Junaid, that's a very interesting question because there's two sides to this, and we very often get exactly that question.
Mm,
Because in the normal course, under the court rules, personal liability entails an entire court process and a judgment, and it is considered piercing the corporate veil. Now, that is vastly different from personal liability per the Tax Acts. Personal liability per the Tax Act may be imputed, firstly, very easily without a long drawn out litigious process and simply by operation of the law. What happens is SARS sends a notice of personal liability to the representative taxpayer, be it a director, a shareholder, case of a closed corporation, a member, trustees, the executor of a deceased estate, whoever is the representative for that category or that type of taxpayer. And per that notice, they simply say, well, listen, we want to impose personal liability. These are the reasons. You need to please provide us with written representation as to why you should not be held personally liable, together with this entire laundry list of supporting documents, which quite often the taxpayer's representative wouldn't have on hand because if you're struggling to maintain your tax compliance and your financial affairs, the chances of you maintaining your documentary records to SARS standards are pretty slim. And beyond that, well, they only give you 10 business days to respond to it. Meaning, if you're talking about a tax debt that even if it just spans the COVID period until now, you've got to sift through 5 years of documentary evidence to get SARS what they need, when they need it, to discharge that burden of personal liability. And then on the other hand, we've obviously got, well, SARS very quickly takes civil judgments because, again, not the normal court process, not a normal civil judgment that can be rescinded or repealed, but rather it is a written statement made by a senior SARS official, taken down to the courts and certified as a civil judgment, treated as such, legally enforceable as such, including getting the sheriff with a warrant of execution, but not being able to do a rescission of judgment as would follow in the normal court process.
and I take it it's not something that's, the taxpayer wouldn't ordinarily receive notice of SARS proceeding with this judgment, taking into account they would have issued a final demand already, and then proceeded with that judgment. But how does one avoid this? What are the typical things that happen which give rise to these taxpayers experiencing these debts and not honoring their tax obligations?
So, from our experience, what we have seen is there's a couple different categories. Now, on the one hand, you've got your individual taxpayers, and what I see most commonly is individuals who engaged in cryptocurrency trading. It was like the Wild West years ago. And that was when the market was at a point where everyone wanted to get in, and now we're seeing a bit of a bull run and people want to cash out. But what they've not realized is while crypto transaction is regulated, and very often that's where an additional tax comes from, or an obligation to declare that tax, which then ends up going the voluntary disclosure program route. And then on the side of companies, I know a number of companies, especially through COVID, initially it was the election to not proceed with retrenchments and cutting staff salaries, but rather to fully pay their full staff contingent and not pay their taxes. And as much as that is commendable from an ethical standpoint, because it was a very tough time globally, from a legal standpoint, it did not detract from their legal obligations under the tax regulations. And non-submission of a tax return, as well as non-payment of tax due per that return, are criminal offenses per the Tax Administration Act. So that is what we've most commonly seen. It is very seldom that a company has a tax liability due to corporate income tax. And I would say 95% of the time, it's PAYE and VAT.
Which are substantial collection avenues for the revenue service as well. And You did mention earlier that, SARS is pursuing this recruitment drive, employing another 1,700 employees, specifically to focus on the recovery of tax debts and this pool that's just there waiting to be collected on. Um, is there any sort of insight or information you could perhaps give to us with regards to SARS's approach towards debt recovery and the steps that they intend to take?
So, the first thing to consider is about 560 billion rand in outstanding taxes in this country. And that was as at end of May this year. Now, from this big number, which is enormous, while one SARS's collection target for the current period is 100 billion, right? Now, breaking down that 500 billion, while about 400 odd of it is undisputed, which means it falls squarely within the realm of tax debts, payment arrangements, and compromises. Now, SARS have taken a number of very creative approaches, really. I would actually say commendable because they have implemented a number of various compliance programs over the years. But at the same time, through these compliance programs, when we looked at the stats at the end of 2024, SARS had written off, by virtue of compromise, 36 billion in taxes, 36.15 actually. And that just shows you that you're now dealing with a very competent revenue authority. And when I say competent, I'm talking about back in the day when SARS was still in your top 3 revenue authorities in the world. Granted, this was a couple decades ago, but they're getting back there very quickly. And what is speeding up this process is their use of AI, machine learning, and it's very evident from the continuous system upgrades and the new SARS Express system and things like that, where they really are sticking to their guns in terms of their strategic objectives of, on the one hand, making compliance easy and sometimes seamless for taxpayers, and on the other hand, making non-compliance hard and costly to the point where they are going the judgment route. They are sending the sheriff out to attach property. They are going the personal liability, the blacklisting routes, all of it, including, and probably most prevalently, directly dipping into naughty taxpayers' bank accounts and pulling out whatever is owed or as much as can be taken, that there's still enough left for that month's bank charges.
Definitely not something that I'd imagine anyone wants to wake up to, a notification seeing that SARS has deducted a certain amount directly from your bank account. But in order to actually resolve that issue, you did mention deferrals of payment, suspensions, and compromises. Perhaps if you could just give us a bit more information on those specific tax debt relief mechanisms, so that anyone who's watching this video is then informed, and knows that there is relief for them.
So remember, the applicability of a specific relief mechanism is very much a specialization and fact dependent. Now, it's the same as if you are feeling ill, you do not go directly to the surgeon and say, "Listen, please remove my arm. I think it's the problem." You first go to a GP who diagnoses you. Financially, what would you do? Well, you'd have a liquidity test done to first, before even embarking on this journey, confirm eligibility for these tax debt relief mechanisms. Now, in terms of a suspension, remember that is used when you intend to dispute. Now, if you are very, very clear at the outset to say, well, I am going to go the debt relief write off or monthly installment payment route, being your deferral and your compromise, then you follow that course because there is no intention to dispute. All of that is gauged by your tax attorney at the very start when they do your liquidity testing, when they actually run a diagnostic to ascertain exactly where the problem sits and what is the best resolution based on your specific circumstances as well as their expertise.
Okay. And that makes perfect sense, especially where you have that intention to dispute. But should you not have an intention to dispute and concede that you are liable for it, in what circumstances would you instead consider a deferral as opposed to a compromise?
Correct. So this is where your liquidity testing comes in. Now, Both of these debt relief mechanisms, as the name states, it is relief on your payment obligation, but in different forms depending on the extent of financial hardship faced. So, when it comes to companies, you would look at their net asset value as well as their profit and loss statements, their income, their cash position, any retained earnings, things like that, to run a full liquidity test. When it comes to an individual, it's a lot simpler because it's a case of, well, what's your liquidity in terms of actual cash and what are your assets and liabilities? Now, that will determine whether you go deferral or compromise. And your key differentiating factor is in the case of a compromise, let's say it's 1.2 million rand. In the case of a compromise, if we look at your liquidity and we consider a recovery period of 6 months, will you then have this 1.2 million liquid and available to settle? If no, you go the compromise avenue. If yes, then the deferral avenue is more suitable based on your future prospects of financial recovery. If we are looking in the case of a company, well, companies, sector dependent, of course, but they very often do have a work in progress report. And depending on the nature of the business, that would also dictate whether it is a cash on delivery system, whether it is a long term project and you are paid at milestone markers. And again, the same liquidity test applies. Will you have your full tax debt available in 6 to 12 months? Yes or no? If no, you would go with the deferral. If yes, then you can say, well, okay, you know what, an interim deferral potentially, and then settlement of the entire tax debt at a later stage. It is a full factual inquiry in each and every case. And that is exactly why it's recommended that, well, one, you begin with the end in mind and you do that full liquidity test at the onset, as it does mitigate the risk of rejection of your request for debt relief. And because of the nature of these applications and because of the very sensitive information that either companies, individuals, trusts, estates have to disclose, you should always be covered by legal professional privilege, meaning represented by an attorney who then engages SARS on your behalf. This also mitigates against the risk of a taxpayer feeling pressure by some questions from SARS and giving an incorrect answer.
which could then cause a lot more harm down the line.
Absolutely.
Thank you, Jashwin. Thank you very much. And yes, as discussed, in light of SARS employing 1,700 people to focus on recruitment and spending billions to recover your billions, anyone who can settle their liability should, but where you can't, please do reach out to us for any assistance with your tax debts. I hope that you found this video to be informative and insightful. Please feel free to like, share, and subscribe.